Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong, and today we are going to talk about candlesticks, my friends. When I saw my first chart back in 2011, I was smitten. It is a love affair that has lasted like 15 years now, and I have always used candlestick charts. So if you're new to the world of trading, if you're new to the world of technical analysis, and you're wondering kind of what technical analysis and candlesticks are all about, that's what we're going to talk about today. We're going to go out, we're going to look at a bunch of charts, we're going to place an example trade, and hopefully by the end of this 45 minutes we have together, everybody's going to say, I too am smitten with the candlestick. So here we go. Just keep in mind that everything that we discuss today, because we are going to look at lots of different charts and talk about different trading strategies, but that everything is for general information purposes only, none of it to be construed as a recommendation to trade any particular stock or chart pattern or strategy in any particular way. And while we do focus on technical analysis, because this is called Getting Started with Technical Analysis, you may want to consider, checking out earnings as they happen and looking under the hood at fundamental analysis and being aware of, what is happening in the world globally and geopolitically, thinking Strait of Hormuz, et cetera, et cetera. All of that can influence the decisions we make as informed investors and traders, right? So we're not recommending that technical analysis be the only thing that you consider in your trading. We'll be using the Paper Money software application on the Thinkorswim desktop platform. And that's just a brilliant place to learn and hone your skills, prior to going into considering placing a trade in your live account. So this class is taught in a 9-week rotation, and then we'll often throw in several bonus sessions before we come back around through the rotation again. We've done classes on Bollinger Bands, on Fibonacci's, on the 8 things I wish I'd been aware of when I got started in the world of trading and investing, and other things as we go. But today we're talking candlesticks. So, what is a candlestick? Well, when we look at the rectangular portion of it, that we call the body. And that shows the relationship between the open and the close. And if it's, an up day, it opens here. Oh, we've got to change that color. Oh, you know what? I have multiple drawing tools at my disposal. And yes, as a kid, I did like to color. I will say that. Whoops. I must have been posting something on X. So if it's an up day, dang it. Here we go. If it's an up day, okay, I guess I have to close this drawing tool if I want to use another one. Okay, here we go. Okay. Oh, I can't win for losing sometimes. We have our open here and close here. And if it's a down day, open and then closes lower. It drops throughout the day versus rises throughout the day. But this body just shows us the relationship between the two. Okay. Okay, so and then we often get these, some will call these wicks and some will call them tails. And I don't really care what you call them, but a technician will call these a wick. And they can happen at the top and bottom. And so, on an average day, and I think the reason that I think every single coach uses these candlesticks is because it just makes it so much easier to see quickly kind of what's happening within a day. So if we have an open here, what can happen is it can open here and then maybe come up and then come down to here and then come up to here before it ends up, maybe come down here before it finally closes here. And so here's our low for the day and our high for the day and our open and close. So we have these 4 points of interest. And if it's a down day, it might open here, and then it might even open here, look like it's going to be an up day, go up, and then come down, rally, come down, and then end up closing here. But that story, and so if it opens here and closes here, chances are the entire body of this candle is going to be red, which shows that it fell throughout the day. And if it's an open candle with a green around it, then that shows that it's an up day. Yeah, and so I've just gone over this, like open, close, high, and low. Those are really the 4 things that we want to know. And depending on what type of trade you're doing, so I just taught the long options class where we talked about a 1 ATR strategy. And with that 1 ATR strategy, if we're seeing something that is uptrending and we're bullish, we might say, okay, we're going to take today's high. And if the ATR is $10.50, we're going to put our target $10.50 above. And so in this case, we'd want to know what that high is. And if it goes 1 ATR below, or if it drops 10.50 below today's low, we want out. And we can do that with a stock. We can do that, with a long call. But, all of these pieces of information are important. Now, some traders might say, I'm just going to use the current price and add my ATR from there. And maybe your current price is somewhere in the middle of the day. That can change, but that's, one way to use the high and low as part of a trading strategy. And if you miss that class and want to see it, you can go back. I've also talked about that strategy fairly frequently in trading a smaller account. So when we look at the body of the candle, it depends on how you set your charts up. But sometimes it may appear green, or sometimes it may appear white or clear or black. It shows that your close is higher than the open. Okay. And if it's red, it shows, and this is saying or black, then it shows that the close is lower. Now, I want to just come out to Thinkorswim for a second, because there's 2 ways. Somebody's talking about bread in the chat, and all I can say is you're making me hungry. Yeah. We're going to go over to the other account. But so if you come to your sprocket and come to appearance, you can choose either candle or candle trend. So I always choose candle trend. Many choose candle. So if we choose candle, it just looks at each individual candle as an isolated candle. So on this day, it opened lower, closed higher. So we have this clear body. On this day, it opened here and closed lower. So the body is red. And here it opened, higher, closed lower. So the body's red. And yet it closed way higher than it did the day before. But when you just have candle and not candle trend, it doesn't look at where it closed in relation to the previous day's candle. The reason I like candle trend is so that this candle appears bullish. And the reason it's dark green is it's showing us that it opened higher, closed lower, but still closed higher than the previous day. Does that make sense? So like if I come out here and let's make this candle, and I have snow up here, if we come and we look at this candle here, it gapped up this day and closed. This day it closed at 252. This day it closed $7 higher at 259, and yet we have a red candle. If you're showing it as candle, if we come and we make this candle trend, it's going to be dark green. So it's going to show that it gapped up, that it closed higher than the previous day's candle, but then fell a little through the course of the day. Okay. But it kind of drives me crazy to have a red candle when something, like if I come to my drawing tool here and this closed up, it closed up 3% higher than the previous day. So yeah, it's just personal preference. There's no right or wrong. And I don't know what most of the coaches do. I know I use Candle Trend. James, do you use regular candle? Yeah, not sure. But if you're wondering why the candles might look different on your chart than mine, so James uses candle. Maybe it's a Canadian thing. We like things to appear the way they really are. James and I like to tease each other. I don't know what to tell you. Yeah. Okay, so that's that. So let's go back and we'll just look at another couple of slides, so that we've got the basics under our belt. And this is something I do hear James talk about a lot. And James was also one of those instructors. Now, don't tell James this because it'll go to his head. And, I just don't want to have to deal with that. But I met him at an investor conference the first time I went to his class. And it's like, as a client, I was a student then. And it was, the guy's so smart. Like, I love the way he thinks. I love the way he teaches. If you're not going to James classes, my friends, like, you are seriously missing out. But he talks about this. In fact, he talked about this yesterday. I was riding shotgun in his class on Monday, and he was talking about these support levels. So especially if you have a candle where you've had something gap up and it starts to pull back, it may only come back like halfway through the body of this candle. And so this is considered a first support level. This candle is considered, the open of that day is considered support level 2. And then support level 3 would be the low of the day. And particularly if, like, we're seeing a situation like this where, we've had a trend, where it's kind of going like this. And then all of a sudden some kind of news comes out and it gaps up dramatically, and we have this kind of candle. So S1, S2, S3. And then some would say, well, if it breaks below that, then this could be considered a potential support level 4. Okay. Yeah. I love to give James a hard time. I will admit that. It's just too much fun. Okay, so, and then the same thing, like if we have something that has been going the other way, and we've had lots of stocks, think Lulu, Nike, that have been on the struggle bus and they've been coming down, and then Nike, I mean, like, it jumped out a window, a couple of weeks ago, and so you have this big down day and it may start to recover, but resistance it's not futile, it's real. Yeah, and so here's resistance level 1, resistance level 2. So, it may come back, and you're saying, well, it kind of rallied, but it only came this far. Well, is it then going to start falling again? And if it breaks through that, will it get through the top of the candle? And then resistance level 3. Okay. Yeah, and that's something that may not be intuitive when you first come to the world of charting and candlesticks. but it's an important thing to wrap our heads around. And then, somebody will say, well, like, how can you tell if it's a large candle? Well, we look at it in relation to the other candles. It's just really eyeballing it. There's no, it's got to be this big or this percentage. It's looking at it in context, right? It's just looking at it in context. Yeah. And there's one, called Three White Soldiers, I think, which is 3 big up days. And then there's one for, 3 big down days. And I haven't got to those in the mini sessions series yet, but we have got, I think I've done 13 in the series of short videos. So, large and small are relative. You're just looking at it, compared to the other charts or compared to the other candles. And, obviously, if we have a large up day, that's heavy buying. If we have a large down day, heavy selling. There was a previous coach, he would call that a BGO moment or a blinding glimpse of the obvious, right? And so I used to have this pinned up on my desk. I currently, like if I turn this around, like my window looks out over the mountains. I don't really have any walls to pin things to anymore. Not, a big deal, but this is one of the things. And in fact, for a long time, the only thing I had pinned on the wall for trading was this summary of these candle patterns. And I don't know why. And maybe it's just me, like I really believe in the KISS principle. Like, let's keep it simple. I don't know why we have to call a hammer a hanging man when it's at resistance, or an inverted hammer a shooting star. But this is basically an inverted hammer at a potential resistance level. And this hammer we call a hanging man when, it's at a resistance level. And what both of these candle patterns indicate is that things may be a changing. And this is a bullish indication of change, bearish indication of change. And then a piercing line where you have a big down day and then the following up day. What makes it a piercing line is if it comes back through that halfway mark. So if it pierces through that resistance level, okay, that we just talked about, in dark cloud cover, this is where this bearish candle goes more than halfway through the body of the candle of the previous day, which could be a potential support level. And bullish engulfing, this is where the body of this candle totally engulfs the candle of the previous day. And this, especially when it occurs at a support level, is considered bullish. And this pattern does not require confirmation. These patterns do. And what do I mean by that? Well, if you see this inverted hammer at a support level, what you want to see is a close above the body of this candle the next day, which in this case we would have had. In this case, it's kind of touch and go whether we had it or not. But if you'd put in a conditional order, you would have been in at the beginning of this day. And on the bearish side, we'd want to see with this hanging man, it trade below the body of this candle. Same thing with the shooting star. But these bullish and bearish engulfing patterns do not technically require confirmation. It doesn't mean they're a guarantee. There are no guarantees. Okay, and the same with a bullish harami at a support level. This is the Japanese word for pregnant. So I think of like a kangaroo and a little joey in the pouch inside the candle of the previous day. So at support, bullish, at resistance, potentially bearish. Okay, and then our morning star, what helps define this pattern, you have a down day, a gap down with a small pattern like a doji here, which is a spinning top type pattern. And then you want this next day to be a big day, to at least go halfway through this candle. And this one, I mean, it went all the way through and then some. And then an evening star, you have an uptrend, a gap up with that spinning type top, and then followed by a down day. So let's go look at some charts. Oh, usually I have a let's go look at some charts page in there. And if there are some particular charts you'd like me to look at, just type them in. So let's start with snow. Maybe I'm saying that because I wish we'd had more snow here this winter. I talked to my brother on the weekend, and I'm from a town 250 miles north of Toronto. And my brother said he's never had a winter where he had to shovel twice as often in one day. Like the ice is still nowhere close to being off the lake. Like they're all sick of winter up there, but coming back to technical analysis, I don't know why I went over to my brother and the snow. But, if we look at this, snow has been downtrending. I mean, it's down 31% year to date. And it's come up kind of to this previous high. Like if we look at, and I want you to type into the chat, what kind of candle pattern are we seeing here today? What kind of candle pattern are we seeing? At a potential ceiling or resistance level. At support, we call that an inverted hammer. At resistance, and I know that there's a bit of a lag from when you type into the chat and I see it, we'd call this a shooting star. Yeah, so on track, you're on track here. So we call this a shooting star. And so is this a complete candle pattern? Sharon, you've got it. It's not. What we want to see is it trade below the body of this candle tomorrow. And so if we wanted to put in a bearish trade on this, like we wanted to buy a put with a 1 ATR target or something like that, we could put in a conditional order, or we could just say, hey, you know what? Tomorrow I'm going to look at this and see if that setup is complete. But so far, no cigar. Okay. How about we look at GEV? Okay, so what are we seeing here? And let's look at today's candle. Well, today, if we're looking at this, and this stock has been uptrending, like up 51% year to date is, pretty remarkable. And it's hit a new all-time intraday high here. But what are we seeing? So, it came up, pulled back. We had a one-day move to the upside. And yeah, and so, it's the same pattern, but now it's at a support level, and we're going to call that an inverted hammer. And, it can be, the body is slightly red. And, the body of this candle is so small, it could change by the end of the day. But if we wanted to place a bullish trade, do we have confirmation yet? We don't. And if we trade by our rules, what would one say to oneself? If I'm following my technical analysis candlestick pattern rules, it would say either put in a conditional order or wait. Okay, so inverted hammer. Now, if we come and look at this, what pattern is this? So if we're just looking at, so we have a kind of a pattern within a pattern. Because this pattern here, shooting star, right? And then if you'd put in a conditional order, you would have been in when that stock opened the next day because it started trading below, and then it did pull back for a couple of days. So, if you had done a long put with a short-term target, like a 1 ATR target, that might have been a successful trade. Also, if we look at this trio of candles here, yeah, Zach and Michael, you have it. We would call this an evening star pattern, where we had a big up day, then we have a candle with a very small body, and then a bearish candle to follow. And it's not saying this, like sell your stock, light a candle and consider this stock dead to you from a bullish perspective forever. Might just be saying, hey, it could be setting up a bull flag. Now, it came back to almost a previous low here, but then it's continued on to the upside, hasn't it? Yeah. Okay, let's look at Oracle. And then we'll look at a couple of your suggestions. ORCL. So with Oracle, I mean, here's the stock. It's still down 6% year to date, but this went from 345 to 134. And I'm not a mathematical genius, but like that's way more than a 50% drop, right? And then, the trend is your friend until it ends. And then this trend started to change. So we saw this period of consolidation starting in February that went through, the middle of last week until the 15th. And then it broke to the upside. We had a 1-day pullback. And then what do we call this candle? Old resistance can become new support, right? So what would we call this candle? And then, in the context, so sometimes like there's candle patterns within candle patterns. So, and then what would we call this pattern? Go ahead and type that in. And would this be considered an entry? So if we're just looking at the hammer, we'd say, well, we need confirmation. We need it to trade above, the body of that candle. With the Harami pattern, yeah, so you guys are right, Melissa and Staygold and Sharon, it's a hammer. And then what's this two? Yeah, one could call it it's a little bit shy of being a morning star. We're close. But to actually be a morning star, we want to see a big down day and then it gap down and have a small body and then a move back to the upside. So we didn't have the gap down component, but we were close. Yeah, and you know what I will do? I'm going to post a picture of that summary chart on X so that if you want to make a copy of it and put it up in your office or, tape it on your desk or something, like I have mine in a sleeve. I actually have 3 candlestick patterns still in sleeves to this day. But this is called a Harami pattern, right? Think the kangaroo and the joey, so and that doesn't require confirmation, but either way, we'd have a technical entry. It's a breakout of this consolidation pattern, this triple bottom pattern. We had a pullback, it's moving to the upside. And so, on Oracle, could we just buy stock? We could. And, we could put a target on it. And so some might say, well, how would I base a target? Well, if we have this triple bottom pattern, and we're going to talk more about basing patterns another day. But if I went from, let's call this 135 to 169, 35, 45, 55, 65, so $34. So our range here is $34. I don't want to shape. See, will it? Okay. Let me close this. So our range here is $34. So I'm going to take 169 and we're going to add $34 to that. So our target is going to be 203. If you want to have a target, now there's no saying you have to have a target. Maybe you just want to buy this as a trend trading growth stock. And as long as it continues to go up, you want to stay with it. Okay, so okay, so we're going to make this 203. And this is going to be our target. Now, where might we put a stop on this? Well, we might say, hey, if it comes back below this 169, we'd like to exit. So 169, if it goes 3% below that, so 163.93. It may be back in this range, but like we were doing this as a shorter term trade. Okay, so we're going to put our target at 203 and our exit at 163. And this is a $183 stock. So for us, we could buy about $25,000 worth. So we could maybe, we could say, well, we're just going to buy 100 shares. Now, why would we buy 100 shares as opposed to 130? Well, we might say, well, we'd like to preserve the ability to be able to sell a covered call or maybe use a protective put. So we'd rather buy, what some would call a round lot. So we're going to buy custom with an OCO bracket. We're going to put a target up here at 203. And we're going to put an exit at 163.93. And our entry was based on the candlestick pattern and the breakout, the combination of the two. So if it goes up by 19, we're out. If it goes down by 19, we're out. So we're putting this in our stocks with targets, and our target is based on the width of the triple bottom pattern. We could do this as an option trade also. So somebody's saying, why buy shares as opposed to options? I just did this as a stock example trade. But you could do, you could do a long call vertical, or you could do a long call. And you have to look at how long do you think it might take to go up and reach that target. And then, you want to buy enough time to make that, a possibility. Okay, so there's an example trade. Somebody wanted me to look at HIMS. So let's look at the candlestick action on HIMS. And again, so with HIMS, kind of similar to Oracle, right? In that, it was, we had this consolidating pattern, this, a cup and handle or kind of double bottom-ish, broke out, pulling back today. And so why is this candle white, but with red around the trim, where this one is white with green around the trim? Well, this one closed higher than the day before. It opened lower, closed higher. With HIMS, it's open lower. It's currently trading higher, but it's not trading higher than yesterday's high. In fact, it's down 4%. Down $1.34 over yesterday's close. And so some might say, well, I see this still as a bounce, off a support level. And I'm going to treat that as an entry. And some might say, well, I want to see it go above the midpoint because this could become a resistance level, the midpoint of this big candle. Okay. So let's look at another one. Somebody said I had a falling out with Oracle and I'm not over it. For me, my stock is Caterpillar. And I know like I should get over it. Oh boy. Like what have we got going on here? Like there's all kinds of stuff, right? So like if we come in and we just look at some of what's been going on here, like and currently today, what do we have? Like I call this a Tums chart. Like look at how big all the wicks are on this. It's just enough to have you reaching for a bottle of Tums. But today we're close to this support level and we've got this hammer type pattern. And others might say, oh, would you really call that a support level? It's just still looking like a bit of a, hot mess express or a dog's breakfast, or, you might see it as kind of being in the middle and saying, I'm not so sure. But if we come and look at some of these other candle patterns, like if we come back and look here, we had this inverted hammer, which we call a shooting star at a resistance level. And then if we had waited, did we get a down day the next day? We did. We also got what you'd call a bearish engulfing. And then did it continue to pull back? Yes. But it pulled back within the context of an uptrend. Now, when you get a candle pattern like this, and it's not, is this at a support level? No. Here's what I would call support, this 30-day moving average. Is it at a resistance level? Well, the last resistance level was kind of up more here. So it's kind of in the middle of nowhere. And when you have this type of candle pattern in the middle of nowhere, it could be indicating a change in trend. So could this be setting up a bear flag? It might, but it may just be a random candle in the middle of a pattern, which is what it turned out to be. Okay. Let's come and look at Dow. So when we look at Dow, and again, when we look at Dow recently, and we can look at it kind of over a bit of a period of time, but what would we call this pattern here? It's kind of an evening star pattern, this 3 candle pattern, right? Where we had a big up day, then we had a small body candle, and the next day was down. And in fact, did it pull back? It did. Like these don't always go quite according to plan. And then here, what do we call this one? Well, one, it's a doji type pattern in that we have a very, very small body. We're kind of in the middle, so it's not quite a shooting star. It's not quite a hanging man either, but it is a candle that indicates that the bulls and the bears have been duking it out and they kind of came to a pass. And yeah, like someone said, Riceberg, you've been watching too many of James Boyd's webcasts. That's all I have to say about that. You guys. So, when we look at this, this could be an indication that a flag pattern is setting up. And it looked for a hot minute like it might be, but, then things kind of broke down a bit, didn't they? Now we looked at this, it came down, we had this bounce, it came back to the 30-day moving average, and it looks like this 30-day moving average has been acting as a bit of a support level, right? Like it came here, 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 came back to the 30-day moving average. And then we had this Harami type pattern. And it looks like we put in a trade in one of our classes where this is our stock target. And in this case, we'd be glad that we did the stock target, because if we had done a 1 ATR target, we would have been stopped out if we had done a long call trade. Okay, so this gives us a little more room. And then some would say, well, when I'm looking at this, I'm seeing a potential horizontal resistance line, and now it's bouncing off a support line. So what you see changes as the chart evolves. So Barbara is asking the question, does a stock typically have characteristic patterns that repeat for that stock compared to other patterns? Some may, and some may not. There it isn't. But one thing that I find about technical analysis that kind of continues to blow me away is, if something's trading in a sideways range, like say NVIDIA was doing for a while, like sometimes, like here's this support level around this 170 mark, and it came down once, twice, three, four, then it kind of flirted with it and looked like it was breaking down. And then it's like, oh, it was not a breakdown, a fake down. And now it's up and, flirting with this ceiling. But it amazes me how often, even though these are ranges, it'll come to within pennies. Yeah, it'll come to within pennies. Yeah, Riceberg is saying, I once, for those of you who it may be newer to James Boyd and I, he teases me about being Canadian, and I ordered 4 dozen Canadian flags and went over and did a whole display in his yard. And it was a thing of beauty, I must say. And it was just a nice breezy day. So all those little flags were just snapping in the breeze. It was lovely. Okay, so guys, you know what? That is a wrap for today. But what I'd encourage you to do is bring up a number of stocks, or just click through the stocks on the Dow, or the stocks on the NASDAQ, and start looking for these patterns. Like, so here on Microsoft, it's been on the struggle bus. It's breaking above a resistance level. Is this, a hammer at a support level? Or is this a hanging man at a resistance level? And we'll just have to see how it plays out. We just, in the last class, interpreted this bullishly, and we put a short-term target on it with the expectation of being out one way or the other prior to earnings. So guys, I do want to just quickly show you, if you haven't subscribed to the Trader Talks channel, you'll want to make sure that you do that. It's free. It's a free resource. And one of the things that I have created as a companion to this class, if we come to the playlist and scroll down to the trade management mini sessions, these are also in the Getting Started with Technical Analysis. Oh, sorry. So we've got 13 so far. And, today we talked about candlestick patterns. So all the ones on that cheat sheet, on that summary sheet, there is a 3 to 5 minute description of each pattern, whether or not it requires confirmation and what it means. And so if you wanted to do some binge learning, if you're new to candlesticks, yeah, that's how you can do it. For JB's chart package, go to X, and he will have scripts to customize his charts posted at the top of his X feed. So that leads me to the next thing. You're going to want to make sure you're following James and I on X, James Boyd CS, Barb Armstrong CS. I'm now also on LinkedIn, so you can wander over to LinkedIn and follow me there as well. So subscribe, follow us on X, and last but not least, make sure you hit the like button. It lets James and I know that you liked and appreciated this class. But more importantly, what it also does is it moves things up in the algorithms on YouTube, so we can find, more people can find this content. So up next is Swing Trading with Mike Fairborn, and then I will be back and talking to you about building a stock portfolio. And today within that class, we're going to talk about sector rotation and place some example trades there. So guys, have a really awesome day. Thanks for showing up. Thanks for being so participatory and humorous in the chat. I love it. And I will see you in a webcast coming up soon. Thanks, James, and thanks to the guys behind the scenes. Bye for now.